Okay, Dennis.
Okay, well, welcome to the Kushner Report for June of 2028. Actually, it's 2024. And at the end of the conclusion of the program today, you'll have an opportunity to participate in our Q&A session. And what we'll do is we're going to take some time off in July and August, and we'll be back on the program in September because it's a quiet time. A lot of people are going on vacations, and so we're going to move to the next step, which will be back in September. So today we have a pretty interesting program. Um, I'm going to talk a little bit about what's happening on a national basis with ransomware. So first of all, today's agenda, we're going to take a look at key economic indicators, the global economy, the domestic economy, mergers and acquisitions, other significant economic news, and what's ahead in 2024. And today we're going to feature what is ransomware, how does ransomware infects a system or a device, the financial implications of a company that's hacked, and of course, general effective strategies for ransomware. So what is ransomware? Well, ransomware is really a form of malicious software or malware that is designed to encrypt files on a device, rendering any files the system they rely on unusable. And malicious actors then demand ransom in exchange for decryption. And in recent years, we found that some of the ransomware incidents have become increasingly prevalent among the nation's states, local, tribal, territorial governments, and also key corporations around the United States and, of course, around the world, and attacking, if you will, the critical infrastructure of these organizations. So, when did it really begin? Well, it really began in 1989 when the AIDS virus began, and people were lured into being extorted for funds to keep their information private. That's kind of where the beginning started. And then how does it really work? Well, typically a malware display on a screen will alert an advertising the victim that their device is locked or their files are encrypted. And in some cases, after initial infection, ransomware attempts to spread to connected devices and systems. So ransomware incidents can severely impact businesses, processes, and leave an organization without the data they need to operate and deliver mission critical services. And a good example of that are hospitals. And I know Dan Ruckman, you remember this happened with Scripps during a time frame when he was scheduled for a medical procedure, and that was on hold. How does it really work with the actors? Well, paying the ransom does not guarantee that you'll regain access to your system or your data. In many cases, we've heard that decryption keys were not provided to the victim in return to be paid ransom. And what's happened is those people came back several times and demanded further additional compensation. So there's no guarantee if you pay the ransom, you're going to get your key to decrypt all the information. So what can an organization really do to deal with this whole issue? Well, there's a lot of steps. First of all, you need to conduct vulnerability scanning to identify and address vulnerabilities, especially those on the internet facing devices, to limit the attack surface. Regularly patching and updating software and operating systems to the latest available versions is really critical to the infrastructure. You need to ensure devices are properly configured and that the security features are enabled, and employ the best practices for the use on hardware and software products and services. The actors often gain access to the network through an exposed and poorly secured remote services area, and then they propagate the ransomware. And in this case, if you go back and take a look online, you can see something relating to Target that had an incident a few years ago. And of course, you have to have storage backups and test restoration of backups files on a regular basis. And you need to prevent and test restoration of backup files regularly. This prevents the ransomware from infecting the network connected to your devices. And there are also many other types of critical steps that can be taken, but that's where you have to use your security team, consultants, or service providers to really help you with the overall process. In 2024, there's some real key targets, and we're looking at supply chains attacked on a global basis. Remote work challenges will keep accelerating. We've seen attacks in the healthcare sector on an ongoing basis, mobile device attacks, and then of course financial services, which is a major area for the United States. So how does ransomware really affect a system or a device? So ransomware attacks use several methods, if you will, or vectors to infect a network or device. Some of those prominent infection type of vectors include, for example, phishing emails and other social engineering attacks. And that is like phishing emails will manipulate the users into downloading and running a malicious attachment. And the attachment might contain the ransomware disguised as a harmless looking PDF. And again, suggestions are when you see things like that, be very careful about opening something that you're not familiar with or you're not familiar with who the sender is. Operating systems and software vulnerabilities. Cyber criminals often exploit existing vulnerabilities to inject malicious code into a device or network. And zero-day vulnerabilities, which are really vulnerabilities either unknown to the security community or identified but not yet patched. They pose a specific threat. And ransomware gangs buy information from other hackers and plan their attacks accordingly. You also have cyber criminals that may authorize user credentials. And what they do, they steal these credentials and buy them on the dark web, or they crack through your specific system and obtain data that way. And of course, you have hackers often use malware developed for other attacks to develop ransomware to any specific device. Then you have what they call drive-by downloads, and that is hackers can use websites to pass ransomware to devices without the user's knowledge. And they can exploit kits using compromised websites to scan visitors and browsers for web applications in terms of the vulnerability assessments and so forth. So now if we look at the financial implications, this is a critical area that most people are not familiar with. So when a company is hacked, it has various detailed financial implications, which can significantly impact its bottom line and long-term financial health. And here's some examples. So first of all, we have brand reputation. So you have negative public perception. That is, customers may lose trust in a company's ability to produce their data and privacy. Secondly, you have customer churn, and that is unhappy customers might switch to competitors, leading to a loss in market share. And of course, you have the long-term damage, and that is rebuilding the trust that takes time and consistent effort. You can go back and watch what happened, for example, to Target a few years ago. Remediation costs. Well, you have forensic investigations, you have data restoration, legal and regulatory fees, notification costs, which are very expensive, at the same time, credit monitoring. All of these things are remediation types of costs that are severe to the end user. Stock price. Well, if you're a publicly traded company, you have an immediate hit. The company's stock price often experiences a sharp decline immediately after a breach, and which is announced due to the investor concerns about the financial losses and future prospects of the company. And then you have long-term volatility, and that is after the initial shock of a stock taking a hit, the stock price can continue to remain volatile for a long period of time. You have a marketplace image, and that is the competitive disadvantage. So competitors might use the breach to their advantage by emphasizing their own security measures and reliability in comparison to your company. And then you have regulatory scrutiny, and that is regulatory bodies may investigate the breach, leading to potential fines and increased security and scrutiny, which can further tarnish the company's image. And again, this is all made public. You have immediate financial losses, and that is there's direct costs where the company incurs direct costs related to investigating the breach. Remediation, there's legal fees, and there's potential compensation for affected consumers. You have indirect costs, and that is such as the loss of intellectual property can impact the company's ability to innovate and compete in the marketplace. This has happened in companies that are in the pharmaceutical space where there's been a compromise on particular drugs that they were developing, which caused a major problem. And you have operational disruptions, and you see downtime. You have hacks lead to operational disruptions impacting the company's ability really to deliver and provide services to their customers, causing revenue losses. And of course, the recovery costs. Restoring systems and operations to normalcy can be very expensive and very time consuming. And then you have the legal and regulatory consequences. And this is where there's fines and penalties were imposed upon you by the regulatory organizations for the issues that you face when the situation occurred. And then of course, there's lawsuits affected by customers or shareholders who might file lawsuits seeking damages for harm that impacted their company's operations or their company directly. Then we have cyber investments, and that is increased spending. So the company might need to invest significantly in cybersecurity measures to prevent future breaches impacting profitability in the short term. Keep in mind now, there's a lot of companies that are selling cyber insurance, which is new over the last few years, and that's another major investment that companies are undertaking now to further protect themselves. In summary, a cybersecurity breach can have far-reaching consequences, for a company, affecting its brand, stock price, market image, and timely and transparent communication, along with robust efforts really to enhance cybersecurity. And you can help mitigate these by taking active steps. However, the long-term effects often depend on the nature and the severity of the breach, as well as the company's ability to respond. So there are a lot of general strategies that are available out there. For example, enhanced cybersecurity measures. In other words, continuously updating and improving cybersecurity infrastructure, including firewalls, intrusion detection systems, and endpoint security solutions. It's an ongoing 24-hour, 365-day-a-year process. Employee training and awareness is absolutely essential. Educating employees about the dangers of phishing emails and other social engineering tactics commonly used to deliver ransomware. That's a major, major issue facing every small, large, and medium-sized company today. You have data backup and recovery. Regularly backing up data and ensuring that the backups are secure and easily accessible for recovery in case of a ransomware attack. And now companies are taking this more often now. So if you are hit, there's a way to shut down one area and move into another area and be more protected. Regulatory compliance, adhering to relevant regulations and standards regarding data protection and cybersecurity. And then you have collaboration and information sharing. This is where sharing threat intelligence and collaborating with other organizations, government agencies such as could be the FBI, the Secret Service, etc., and cybersecurity experts to really stay informed about emerging threats and effective defense strategies. So it's also worth noting here that attackers frequently adapt their attacks in response to defensive measures. So organizations need to remain vigilant and agile. So you may take one step, the counterpart will take another step. Now, in the last week or so, there's a company called CDK. It's a major car and dealership outage, and this is continuing on right now. This is a major effect around the world, affecting not only the United States, but Europe and all over the world by a group of hackers. The hackers group is called the Black Suit, and it's behind cyber attacks on the situation. And they're demanding millions and millions of dollars. So that's the latest major activity going on in the ransomware space. And it's hard to tell when that's going to get resolved. So now let's take a look at some key economic indicators. We're going to look at the gross domestic product, inflation, unemployment at the federal level, the California level, and the price per barrel of oil. So the key indicators here to look at, first of all, it's anticipated that the global GDP will go on around 3% this year and then drop down slightly to 2.8 next year as the economy continues to move slowly going forward. In the United States, we're looking at GDP this year around 2.3% and dropping down to 1.9% next year. And if you look at inflation, we're hoping to see inflation go out this year around 3.1% and then dropping down to 2.6 in 2025. Keep in mind the target that has been set over the years at 2.2% is being examined to determine whether that's realistic or not. But at this point, we won't probably reach 2.2, maybe until sometime in 2026. The unemployment picture on a national basis right now, going out the end of the year, is somewhere around 3.9% and then escalating to 4% next year. The state of California unemployment rate is 5.1%, much higher than the national average, and then dropping down to 3.9 next year. The range we look at on the price per barrel of oil is still a good range, between $80 and $100 a barrel. And I'll talk more about that as we discuss the oil prices later in the presentation. So first of all, OPEC announced they've extended oil cuts. So they're going to continue to drop 5 million barrels a day, and that's going to continue throughout 2025. The intent here is to raise the price per barrel of oil to increase the selling price to generate more revenue, and that's the target by them right now. Now, banks around the world are now taking a look at the infrastructures around inflation and deflation to see what they're going to do. So, first of all, the Bank of Canada embarked on money easing last month by dropping their interest rates by 25 basis points, where it now stands about 3.75%. The Bank of Canada, on the other hand, took the same steps. They dropped theirs by 25 basis points. They're down to 4.75%. The Bank of Japan at this point is waiting. Essentially, what they're going to do is they're waiting to see what's going to take place further in the year and before they make any decisions. And they've been pretty conservative going forward. In the area of China, as you know, China's economy continues to be a real issue for them. Expansion momentum has really slowed in the last several months. Chinese housing market and real estate market has really taken a major hit. We've seen output decline substantially across the board. And the Chinese government basically is being required and asked to invest money into real estate, loans, and everything else to try to get the real estate market back on track. But that's really dragging down the economy in China. And of course, the Reserve Bank of Australia held their rate steady last month at 4.25% until they can see a further easing of inflation. Really, in the United States this month, inflation did cool a little bit. We saw it drop down from 3.4 to 3.3%. Still waiting to see. I mean, there's speculation that the Federal Open Market Committee, which will meet again in September, will consider possibly dropping rates. So we may see a rate decline between September and December of this year. But right now, it's still too early to tell. Keep in mind, as we get to Sunday, we complete the second quarter and the first half of 2024, and we'll have some better understanding of what the markets are looking like and the economy, if you will. As we move into the month of August, we should start having data coming available on the first half of the year. And again, the wholesale price index dropped a little bit, slightly, but not much to really go into. So let's take a look at inflation. I mentioned earlier the pullback, it dropped down to 3.3% annually. Prices have eased a little bit in consumer staples such as gasoline and groceries, which is still high. But the housing inflation has really been stubbornly high. I'll talk more about that in a minute on the rates. But again, interest rates for the housing market is dropping slightly, but still much higher than it has been over the last few years. Trade exports. Good news here is exports were up by $2.1 billion, just under $264 billion for the month of March, which is good news. And then we're looking at the trade deficit. Unfortunately, the deficit widened. It was up about 8.7%, just under $75 billion. That's one we have to watch very carefully. Retail sales were relatively flat during the month. We saw a gradual moderation, up slightly, about 1/10 of a point. So not a lot of movement. Now let's take a look at the employment picture. So payrolls increased by 272,000 in the month of May, and the unemployment rate remained about 3.7%. Did drop down from 3.8 slightly. If you look across the board, there was growth in almost every vertical market, with the exception of mining. Information services was relatively flat. That's really focusing on the high-tech space. And you can see where construction added 21,000 new jobs. The real key here is to look at manufacturing. Manufacturing continues to be in a contracting mode. However, they did add 8,000 jobs last month, which is very good. And looking at the state of California, here we looked at payrolls increased by 43,000, just under 44,000 in May, and the unemployment rate decreased to 5.2%. Most of the vertical markets had good participation. We saw construction moved up, finances back on track, health and education continues to be there. The information space, which is primarily IT, saw another loss of jobs, and manufacturing in California saw a loss as well. And then you had everything else was relatively flat. So that's kind of where we are for the month of May. But as you remember, there was something like 5,000 or 6,000 jobs last month. So it's moving in the right direction. Now, if we take a look at the interest rates, as I mentioned earlier, the rates right now are between 5.25% to 5.50%, and they're going to stay there until, again, possibly when we look at things in the month of September. So right now, nothing is changing. And again, they're watching inflation very carefully. Now, the good news is the mortgage rate dropped down late last week to 6.94% from over 7%. Still high, but it dropped down a little bit. So that's good news in that perspective. I mentioned the manufacturing index, which is really critical to the U.S. economy. And what we're seeing here is the activity contracted again in May for the second straight month and the 18th time in the last 19 months, it's declined. And we're running right now about 48.7% in May, and that's down a little bit from the prior month. Keep in mind, the target is to be over 50 basis points. And when you're below that, you're either in a recession or entering a recession. So they've got to get that index up. It's been relatively struggling over the last several months. Small business confidence level, it rose to 90.5, which is good news. The good news in that perspective is the fact that we're looking to get to the 100 basis points, which is a healthier place to be. We've been over that over the last several years, but we're still below. A lot of concerns going forward. Small business confidence level, we saw this again inched up a little bit. So we'll see what happens. But on consumer confidence, the good news is we broke 100. It's up to 102 now, and it's moving in the right direction. So there's more confidence coming back by consumers. Crude oil prices, interesting. This morning, they're at $81.67 a barrel. And that's about $4 or $5 up from the last time we did the program. It was up at 77. So oil prices continue to vacillate to stay where they are right now. We're in the summertime. More people are driving. There's more flights taking place. So we'll see where this goes over the next couple of months. Then we have a situation when we want to take a look at the areas. Sorry about that. So now we'll take a look at housing starts. What I'd like to do here is if we take a look at housing starts in general, it was nearly a 4-year low last month. It dropped down by 5.5%, slowing down across the country. When we look at new home sales, if you will, dropped about 10% in the market last month, and that's down about 11.3% from the prior month. So it's slowing down. Now, if we look at Southern California, let's take a look at Los Angeles. So in the LA marketplace, the average price on the market right now is $811,000 for that products that are available for sale. The price is down by 1.7%. And in May sales, we're looking at 11.7% increase in sales. So it was very good month for sales, and that's up over April. And we were up about 3% over May of 2023. If you look at Orange County, which is really the bellwether for the state of California, home prices were 1.422 million, and it decreased by 1.2%. But however, sales increased by almost 12% over the month of April, and sales were up 12% over May of 2023. So in spite of the fact that the mortgage rates are high, a lot of properties are moving and at higher prices. And if we look at San Diego, the midpoint price was at $1,025,000 for the inventory. That price declined by 2.1%. And in May, for example, of last year, we were up about 6.2%. So it's very good. So still solid inventory and growth in the state in Southern California. Existing home sales fell by 1.7% in May over April. So we're still seeing that taking place overall across the country. When we look at construction spending, we saw spending decline last month by 0.1 of a point, and that's the second straight month that's happened. So meanwhile, productivity report will not be released sometime until August for the second quarter of this year. Now, finally, we have companies that do a lot of work in the area of displacements. And the good news is we only had 4 companies that had a major impact this month. And that is Siemens, their turbine division, eliminated 4,000 positions. Microsoft, again, eliminated another 1,000 jobs. And we have Bristol Myers Squibb, just under 1,000. And then finally, we have Zachary Industrial, which is an engineering and construction company in East Texas, and that was 4,500 jobs. Now let's take a quick look at the M&A space. Again, in spite of the fact that the interest rates are high, we're still seeing a lot of activity taking place. And a lot of this is demanded because of what I would say slow organic growth. So you're seeing consolidations taking place in the cellular business, oil industry, and also in the biotech space. So T-Mobile is acquiring U.S. Cellular for $4.5 billion. They're trying to gain market share in that space, competing against Verizon and everyone else. Then you have ConocoPhillips is acquiring Marathon Oil for $22.5 billion. And again, that's expanding their footprint in their marketplace. Biogen is acquiring Human Immunology Biosciences for $1.5 billion. And here it's an agreement to move into a new space for them in the market. Then you have Crescent Engineering and Energy is acquiring Silverbow for $2.1 billion. And this is oil and gas company. It'll be the second largest operator in the state of Texas. And then BD is acquiring a company called Edwards Life Sciences for $4.2 billion. And again, it has to do with a lot of algorithms for patient and new types of radiation and monitoring treatments. Sony Pictures is acquiring Alamo Drafthouse Dine-In movie theater chain, which is interesting. So for many, many years, the entertainment industry has been prevented or barred, if you will, from owning theaters. And now they're moving in that direction, and they're going to pick up 35 locations, which is kind of interesting. Then you have Authentic Brands is acquiring Champion Ultrawear for $1.2 billion, and which is kind of a good thing. They're expanding their market share in that area. And then we have Cognizant Technologies is buying Belcan for $1.3 billion. This is basically a digital engineering firm. So what else is happening of significance? Well, first of all, U.S. pharma giant Centura Health information was stolen in a major data breach about 2 months ago. And there's another example of a major hack taking place. And of course, we have key engines of the U.S. economy spending are starting to lose steam all at one time. What we're seeing is Americans are relying on credit cards and disposable income is beginning to decline, if you will, hoping for a slowdown. And there's no major breakthrough in the economy. But the real key is the savings rate, and that's down substantially across the board. So people are using more credit cards, if you will, to pay for daily situations across the board. So this is causing problems. You're seeing the slowing down taking place in the marketplace. A company called Dollar General has decided, if you will, to eliminate the vast majority of their self-checkout situation, reducing, and they have about 12,000 stores. If you think about this, the theft around the country in all of these retail places is just unbelievable. It's almost double from what it was a year ago. So if you go into different companies, like for example, if you go to Walmart, you may see a situation where, let's say they have 8 areas where you can do self-checkout. I've seen them, what they're doing, they're cutting in half where you can do 4 only, and they've got 2 people in there now watching what's going on. They're beginning to check people when you leave on your receipts. So there's a real problem going on here with theft across the board. Now we look at the California. This is interesting. As you recall, on April 1st of 2024, California implemented a $20 minimum wage for people working in the fast food services. And since that time, there's been over 10,000 jobs lost based on that. And we've seen some restaurants here in San Diego, for example, where they've reduced some hours and they've also reduced headcount accordingly to be able to stay in business. Now, Rubio's has been around for 40 years, and they filed bankruptcy. They're a Carlsbad company. They closed 48 restaurants, and they've got about 86 more. Although they're in bankruptcy, they're working to try to sell the company to another company that they compete with. And we'll see what happens going forward. And Rite Aid announced they're shutting down another 27 more locations across the board. And they've basically eliminated more than 520 locations around the country. They continue to struggle. So now what I'd like to do is open it up for question and answers.